All right, guys. In this video, I just wanted to answer a question that I get pretty often, which is why don't I use indicators on my charts? Or you don't typically see me use indicators. If you've been following me for any length of time, you probably see me, put up price charts one after another. But probably have noticed the absence of indicators, even moving averages on the chart. And that's generally because at least my edge or my methodology is based solely on price action, um, and understanding the relationship of different price structures within the market. Now, the reason for that is because, most indicators that you're looking at are going to be lagging, meaning that they're not necessarily indicating anything that price will do in the future. They're indicating what price has already done, and so they're lagging in nature, most of them, with a few key exceptions. And if I do find those exceptions, I'm extremely interested in those. But most of them can be described as lagging. Um, Now, a moving average is generally going to be, I consider it to be an indicator as well. I think the one thing I would, I have still have moving averages on this side of the chart. Well, that's a Bollinger Band right there. But I have the 55, the 10 moving average, the 200. Um, they're they're okay. I think the one thing I would say about moving averages is that the actual price level that the moving average falls on is not as significant as the behavior of the moving average itself. And by that I mean, it doesn't matter so much. We'll just go down to the daily, look at this with fresh eyes. It doesn't really matter so much what that price comes up and tests the moving average. At least in my opinion, I'm more focused on the behaviors, right, of price. Most specifically like the slope, right? Because you can see, price here gets a pretty aggressive slope on the moving average, and that's kind of you know, I guess the distinction I look for in moving averages, what I'm trying to say is that I'm less concerned about the actual price print that they're coming in at. So you could essentially take price off and just look at moving averages like this. Maybe I turn this to a 21. A lot of people like to use the 21 and 55. Um, but the idea is that if you start to see lower period moving averages crossing above higher period moving averages, or crossing below and expanding away from each other and getting an aggressive slope, that's generally a good sign that order flow is changing in the market, and the moving averages changing their behavior is telling you something about the nature of order flow that's changing. And so that's something you want to keep an eye out for. But you don't necessarily need moving averages to identify that in a chart. Um, but again, so a lot of times people can be doing different, using different tools to identify the same thing. So a lot of times that comes down to, what is your preference? What are you trying to do in the market? What's your time frame? All those sorts of unique things. Um, I do tend to focus on on chain analytics, just because you know they're not very useful for day to day price action, but I do feel that they give me a pretty decent edge on the market with a few notable on chain indicators in that category. I used to trade RSI, I used to trade stochastics. I used to trade moving averages as well, but I've since moved away from that and moved towards a purely price action model. And the reason for me is I just feel closer to price in that situation. I feel like I can react more dynamically. I can manage a position without as many mental barriers governing my behavior, and so it just works for me. Now, with that said, I would make the caveat that if you do have a methodology that incorporates indicators, and that you've demonstrated that to be profitable over a long period of time, then what I'm saying right now doesn't mean shit. I mean, at the end of the day, if you're making money over time consistently, that's really all that matters. And everybody else who doesn't like it can go fuck off. So essentially, that is the goal. And at the end of the day, if you're making money, it doesn't really matter what anybody else thinks, right?